Well, good afternoon. It's Gene Inger, and this is a pre-close comment with about 20 minutes remaining in today's activity. We're going to do something we never do during the day. I'm starting out with a weekly basis chart. The reason is obvious, and that is as our pattern continues and the so-called ping pong moves broke to the downside, as I said they would in advance, not only calling for this as the crash alert, and this is an A wave, overall B wave, and then C wave down, which, by the way, can lead on a measured move to the 2400 area and then to a rebound, even if we head lower later. That's just something to ponder. But for now, what is clear is that while many kept saying this was a range, I kept saying, no, it's not. And it's also not important that it goes below the February low. I felt that was a given. And we're about to make a new closing low now for the year, whether or not the intraday low goes below the February low or not. I think it probably will, as a matter of fact, but it's not terribly relevant. That intraday low was 25.32. I'd like to X out spikes on dramatic days or turnaround days, which is why it doesn't matter. We're already below the level that I look at. We were last week when I pointed out we were already below the low of a couple of weeks before, and therefore, again, avoid the spikes and realize that there was no bullish alternative. I've been saying that for days. There is no bullish alternative. Whether or not you get a brief reprieve on the Fed, whether, I don't know about Santa Claus, that's nonsense. But, and it's always, if there's going to be anything, it's after Christmas and before New Year's, but most books are probably squared already for the year, or they're doing so. Part of the problem is that a lot of people keep talking about buying dips, which means, as I've argued here, they are, generally speaking, heavily long the market, and therefore they're in trouble and they're caught. And I've tried to warn all year, sell the rallies, don't get in that kind of situation. With that said, the credit spreads signal recession. We're not even close to capitulation. An asset bubble, a credit bust recession. What do you want? What shall we argue? Nothing to argue. It's simply unfolding as outlined for months. And here, you had the preceding rally contained at 2,800, as I thought it would. I thought 2,700 would not hold. I thought it would become a ceiling on subsequent rebounds. It did. You know what's happened. And I thought 2,600 would maybe get a little bounce, but not much, and that it would fail, and that there's no such thing, unless, of course, there is after the fact if you make one. But I didn't believe in a triple bottom, so I thought this was the secondary test. This was your failure. When it failed at 2,800, you already knew that the probabilities were, barring some Chinese deal surprise or something out of the blue, that you would take out this preceding low. And that's what we've done. So now we're at 25.38 and we're heading south. And it is, essentially what I've outlined. Meanwhile, let's take a look at the intraday chart. And here it is. We might get some tiny squaring here late today, end of the session. But I don't think it changes much of anything. So that's it. I've basically discussed it. And made a lot of points that I've been making. The difference is you are our little group here, and I wish it was slightly bigger. Tell your friends. But Gunlock can say it and get on CNBC, and a lot of people will hear it. And I know the difference because I know the reaction when I would make a couple dramatic statements on television in the old days. But I will simply say that most of the points he made, I agree with. The difference is he made them on the bonds too early. He knows that, acknowledged that. We are not bond folks, but we've pointed that out this year, and we pointed out the corporate risk. And one of the big differences is we nailed the upside on the stock market in 2017, while at the same time looking for it to top out in January with that blow-off parabolic move. It did. The rest is history. The Dow right now is down 572, trying to come off the lows a little. The transports are down 133. Breath is, 7-1 negative. 8-1, 342 up, 2619 down. The ticks are negative 800, 600. Look how it's bounced around. We had a plus 500. Now it's a minus 700. all over the map and rapidly. The problem is you haven't had a panic. You haven't had a capitulation. They keep talking about buying. I talk about buying in the future at some time, not yet. So crash alert continues as it has from the beginning of October. Now VIX up 391. The Russell down 30. The 10-year yield at 2.857. The 30 at 3.114. Both are down a bit. Dollar index down 0.25. Bank stock index down less than a point. Bitcoin rebounding 385, but it's not capable of being your contrary movement to the market like gold and silver in the old inflation days, which this is not. The NASDAQ down 193. The NDX down 188. The semiconductor index down 20. XLK down 180. XLC down 115. That FANG ETF is down about 4.5. Oil index down 27. Crude oil down 189. GLD up 0.76. Silver up 7 cents. We can look at the intraday individual stock action. It's all negative. Apple down 272. I warned about it at mid-session, and it was up at the time. And I said, Apple's going to roll over. It and Amazon and maybe Google a little bit and oil, Exxon. Those can be your keys, and as they turn down, so will the market. And they did, It did. Apple down 271. Amgen down 311. Advanced Micro down 121. Amazon down $84. As I've said, this can get cut in half from the highs, perhaps. Boeing down 397. Google down 33.60. Intel down $1.16. Texas Instruments down 271. IBM down 472. Facebook down 504. I've warned about all of these from around the highs, even slightly before and slightly and at and slightly after. Topping process. Netflix down 521. Nvidia down 412. LightPath down 7 cents at 160. It's been cut in half from where it was at one point last year, but guess what? It might end up doubling next year. Depends if they execute and how things go, I suppose. Telephone 29.62 down 60 cents. That's significant. That's because there's nowhere to hide when you're in an index and an ETF, and they take the good girls and the bad. Baby in bathwater. Exxon down 205 today. In any event, S&P right now down 68 handles, and the Dow Industrial Average essentially on the lows down 614 points. Good afternoon. Back this evening.